The money.
Here we go.
Hello and welcome to Money on the Floor Currency Trader. I was just wanting to go over some trades and go over some, techniques on trading that I like, that work for me, and why I do them and why they work. For me, the most important thing is a small stop loss. And when you have a trade, you need to have a smaller loss and a larger win. If you cannot do that, you will not make money. You can't just guess and hope that this trade's going to work out and that you're going to make more money than you lost yesterday. It never works. You need to have a system, and then you need to have a way to control your stop loss. And for me, it's with resistance and support. Like this morning, we called out the trade. It didn't work out. It climbed up over the trend line, which was resistance, and it ended the trade. But because we knew it was right away, it ended the trade. Therefore, you can wait for it to reline up, which it did, and now it's into profit. But the whole idea is that you got resistance to your back or support underneath you, so that when you try to sell, you're selling right up against it. So if it works out, you got a long run. But if you lose, you got a short loss. And that is so important. That is the only way you will make it. Because guessing, see what happens if you come down in here and take a trade? Your stop loss is actually way up here. So that's a big stop loss for me, I think. It doesn't mean I don't take them, but the ideal trades are right up against resistance. So that if you break that resistance, that you know the trade is not going to work out. It has violated it. You know to get out. There is no misunderstanding. The trade is over. Just close the trade. Wait for it to line up again. And it did right away. Now we're way down into profit. But I got this thing zoomed out so you can see that we had support levels, or resistance levels way up here. We were coming in to hit these. Now we were hitting one when I called it. It just wasn't the one. It wasn't strong enough. It went up a little bit more to this one and then turned around. And that's all. But the idea is if you took the trade here, your stop loss goes right here. You should go about 10 pips above it just in case, because it will penetrate through a little bit. But the idea is that you have a small loss and you have a bigger win. And if you do that on all these resistance points, right? If you did that right here, you won. You did that, you won. You did that, you won. But look at what you won. You won a lot. 100 pips, 100 pips, 80 pips. And then if you did it off support, 100 pips is the opposite, 80 pips, 50 pips, 50 pips. I mean, that's the way it should work. That for me is the best way. And when I call out trades, I try to have those style of trades so that, or we're within a triangle and we're trading within that triangle or up against a trend line, and the trend line is support. Any trend line is going to be an area where they have support and resistance, even if it's diagonal. So like right now you have one here, diagonal coming through here. There's all kinds of trend lines in here, but they're all support and resistance. Everything is. And that's what we trade off of. And it's very important you understand that. So when it does violate that trend line and closes above, you close the trade before it's a stop loss. You want to control your losses. If you cannot control your losses and you let the losses run against you, or you let them go to your stop loss all the time, you need to be able to close them sooner and get out, even if you're wrong. Even if it went up here and you closed the trade, and the trade went sideways for a while and then decided to come back down, well, that's a new trade. That's all. And you have to treat it like that. But if you do that, you will be around trading for a long time. And the whole idea is you will have 1, 2, 3 losses maybe before it turns around. Like this morning, I called out the trade, it lost. But then the next one, if I would have called it out, which I did, and I was sleeping at that time, I went back to bed, and it actually worked out. The thing is, you had to be ready for it, because eventually these are going to be tops. You already saw that it was before, so that means these are strong resistance points. Where did it turn around? At the strong resistance points. That's all. And all you got to do is go back to history. It's so easy. Just zoom out on your chart. Take a look at what's going on in the big picture. The big picture, this is the high, this is the low. If you trade in the middle, you're in trouble. because now you really don't know which way it's going to go. The market could do anything in here, anything. These are the ones you want. You want to trade off of these. If you can trade off of those, that's money. Doesn't mean you can't trade off of these. You just have to know when it's violated, you get out. And that's why anytime I give a trade, it will have a violation point. There'll be a trend line right next to it. I always trade with trend lines because they keep you out of trouble. It keeps your losses small. And you know when to get out. So it's very important. And if you can learn that and practice that, you'd be so much better off. You don't need indicators for that. You can just draw lines. All you got to do is zoom out. I can take all this off. You can just draw a line across these two tops. You can see where it goes. You got one here, one here, and one here. They're not all at the same level. So you got an area of resistance, basically. And it always is. It's not an exact area. We'd like to think it is, but it's not. It's this whole top. And if it breaks that, you know the trade is over. It's going to go higher. And especially if it breaks this one, it's going to go higher because now there's nothing else out there. You have to really zoom out. And this is a long way zoomed out. But you can see why these points are so important. They don't always hold. We had one up here earlier, and it didn't hold. It went higher because it wanted to go to the strongest one. That's all. And there's nothing wrong with trading in between it. You just need to find a way to control your stop loss. That's all. So you're going to say, I'm going to give it 10 pips. But the problem when you're in the middle and it goes against you, it's hard to take out for 10 pips because, sometimes the market's just moving back and forth. This thing's moving 20, 30 pips up and down. So if you take a trade in here, like if I took this sell trade and it didn't make it to here, where's one in here? Like usually when we take this trade, it's the arrows down to the big green one. You took this one, it came in. If you didn't get out, it came all the way back and took the money back. And then if you took the loss, it went back down again. That's what the market does. Now, if you can be patient and not be like all the other traders and just have to be in a trade, when you open the charts, do you have to be in a trade? No. You should be analyzing the charts. And now for me, what I did, I had to always be in a trade. I don't know why. I was like that. I had to be in a trade. I wanted to trade. I was excited to trade. You know what you do? You trade demo. And then when you finally see the stupid thing is actually doing something, and now you finally see it after you've been trading demo, losing money or playing around or whatever you're doing, either way you're giving your analysis of the market. You're seeing it. But once you finally see the market turning, like up here, now you can go to your live account and trade it. That's my recommendation because I like to trade, and if I'm not in a trade, I'm not happy. So what I do is I trade demo. And then when I actually see a really good trade, when I'm trading all this and I see everything finally turn around and it's going up, then I go to my live account, open up a buy trade. But when I'm in the middle and all this crazy stuff, I try not to trade anything live. I only like to trade off the tops and the bottoms with live money. Because that is the best and that is what works. That's what makes you the most. Why? Because that's where you get the most movement. You got in here, it's hard not to make money. It's hard. You got in here, it's hard not to make money. But if you got in right here, oh, good luck. Your mental game will knock you out. Not even worth it. That's like scalping nightmare. I'm not saying it can't be done. We all do it. But it's not where you should be. That's all. Where you should be is trading down, trading up, with support or resistance to your back. If you can do that, that means you have a stop loss right there. You trade this buy, and your stop loss was down here, you got stopped out. It's easy to get stopped out. The market's all over the place. But if you're here and it does it, you know the market's changed or something's wrong. You need to be out. There is no doubt. All this thing did is come down and then take off again. So, and yes, it does it up here too, but you know when it crossed the line, you got out. That's all. It's a way to keep control of our losses. Because if you can't keep control of them and you have large losses, if your losses and your wins are the same, you have to be a super good trader to make any money. But if your loss is 1/10 of what your win is, or 1/3, it's easier for you to make money. That's all. It's just common sense. So anyway, guys, I hope you guys have a great day. We'll talk to you soon. I just wanted you to understand the way I look at the trades and the way I like to trade. And when I call out a trade, there's usually always an exit right away above us. So, and if it crosses the line, which it did this morning, the trade is over. That's all. It's a way to keep us out of trouble. When the trade lines up again, then you get back in. That's all there is to it. You don't need to wait for me to call it out. You see it again, you know it's going down because we're way up high against resistance. It's got to come down or it's going to break and go up. It can only do two things. And I tell you, a lot of times I'll put on here that it could go up, could go down because it can. We don't know which way yet. Once I can see which way it is, then I'll call it out, but not till then. And I'm wrong too. I mean, we're always wrong. The market, there's no way to outguess the market. I thought we were already up against resistance. It looked like it was turning around, but the market's tricky. It's trying to trick you. It wants your money. That's how it is. So if you can trade up here and down here, you will make more and lose less. That's all. Anyway, guys, have a great day. We will talk to you later. Bye-bye.